Welcome to Monday, the 1st of February's morning update from Phoenix Blue. Well, let's hope February continues the same as January did. It was a fantastic month, and what we have to remember now is we just have to focus on the process, keep everything in check, and not get too overconfident, and make sure that we do follow our process, our rules, keeping in line with all our fundamental analysis and executing via technical analysis. We always trade with a strong bias, and this is proving to pay dividend. All the people that have been following us, I know they had a fantastic January as well. May I just ask, for those that are actually subscribing to our YouTube channel, will you please always remember, if you do like the content, to click the like button, and those that are new to the Phoenix Blue YouTube channel, please don't hesitate to click subscribe or tick the like button. If you do have any questions about the information that we put out, please don't hesitate to also email info@phoenixblue.co.uk. The website is coming. It is under construction right now, and we look forward to having that live for you in coming weeks. Okay, so what's happened overnight? Well, we've had some interesting news out of China. More weak data from PMI numbers, again coming in under 50, and the service numbers coming in just over 50 at 53. Let me just show these to you so you can actually see. Now, the data out of China, this is weighing on the markets. So here we go. The manufacturing PMI came in at 49.4. This illustrates contraction, not expansion. It was worse than expected, coming in at 0.2 less. Then we have the non-manufacturing PMI. This is coming in at 53.5. It is above 50, showing expansion still, but this is in the services sector. This is the transition that China is trying to go through. The worrying fact is that it was actually worse than the previous month. Now, this is one of the numbers that we do have to keep note on, see if this services sector is going to keep dropping. And then we can also see that the other manufacturing PMI number came in at 48.4. Now let's have a look at how this cross-reference into the markets overnight. So if we look at the Nikkei, well, the Nikkei, as we've got to expect, is still having, not only did we have a gap up, so Friday's close was here, so we've had a gap up, and now we're having a bullish day. So we've got an up-range day. Is this expected? Well, looking at what the Bank of Japan put in place last week, we've probably got to expect further upside to the Nikkei. So those that are trading indexes, we're probably going to see a continued rally, a bit of strength throughout the Nikkei after the Bank of Japan decided to cut rates, and have insisted that they will take further measures should it deemed necessary. Okay, next market we will have a look at is the Shanghai Composite. Well, we can see what's happened last week. We had a close below this significant level, and then again it tested. We had another down day, followed by Friday's bullish day. Now, as we highlighted on Friday, could this be profit taking? So maybe shorts underneath here, we'll probably see a continued downside. Now, the news that's come out, it's not really made a great impact. Yes, we are seeing a down day, but the candle is still within the range of Friday's data, therefore indicating indecision. Is this anything to trade? I'd sit on the sidelines right now if I was you. Then we'll look at the Chinese yuan. Well, not a great deal to actually talk about there, sitting sideways. Okay, now let's have a look at the news and what we can expect today. So we've obviously had China's news come out. The next high impact news we can see is all PMI numbers through Germany, France, Italy, Spain. Okay, so we can see that there's probably going to be some the figures coming out in relation towards the euro should be significant. So what we can actually look at is seeing if the range is actually going to get broken on the euro, and I'll show you that in a minute once we look at the other news. Okay, so the next news we can look at are there's no real high impact news until Mr. Draghi speaks down at 4 p.m. later today, right down here. The rest of the news is all PMI numbers, mortgage approvals. So it's the first of the month. We'll be getting quite a bit of this news out of the way. And to be fair, I'm going to see how the markets react to this news today. Now, we'll come across to the first chart I want to take a look at is sugar. Okay, so sugar, this is something we sold just over 7 weeks ago. This was based off a commitment of traders information. Now, this is something that we do analyze every week, and we use this to our advantage to see whether we're going to see continued trend or whether we're probably going to see an end of trend. As you can see, coming through end of August through to mid-November, we saw increased strength through sugar. This gave us a short-term signal on the commitment of traders that this potential strength was about to come to an end. We took a short through here early part of December. We've been holding on to it just over 7 weeks now. Now, you can see that this level here, 13.9, was holding. Now, we did actually last week take half of our position off because we'd been in the best part of 7 weeks and the market wasn't moving. So we just wanted to reduce risk a little bit because we anticipated that the market may move faster. Now, the market's moved, it's done as we expected. So areas that we can potentially look to add into this market, because we are risk-free now and we're sitting in a tidy profit. So first area that we're going to look at is this one through here around the 13.5 highlighted. And then the next level will be up at around 14 to 14.1, where we'll be looking to see what kind of price action we get and look to run this particular trade down to the 11.5s as a first sort of target. Okay, now we're going to move swiftly on to the Forex charts and to another couple of commodities. So we're going to start with the euro dollar. Okay, so we can see the euro dollar has been in a bit of a transition, i.e. it's coming into some consolidation. Okay, we can see that highlighted there, and if we just put these in here as well, we can see there's a nice top of the range where we could be looking at getting short, and our bias at Phoenix Blue is to the short side, so we will be looking at taking short trades. Now, ideally, you should only ever be trading with your bias, but if you are going to trade contrarian, i.e. looking to trade long, well then please, if this is something that you're going to put into your trading plan, make sure you do it at reduced risk. Here at Phoenix Blue, what we're going to look for are short trades from resistance. If we don't get the opportunity from resistance, what we'll look at doing is we'll look for a clear break below our support level and then for some sort of retest. Now, whether it's going to be off the trend line or whether we're going to see a retest of this area here around the 108s even number, then that'll be a significant area for us to look and get short. Moving across to the Japanese yen, well, let's just bring this in so we can see what's actually going off. Okay, so they released negative interest rates. We had a 260 pip one directional move, and look where it's come. It's come and stopped straight into resistance. Okay, so before we actually trade the Japanese yen, we need to get some clear focus. Now, the Japanese yen, as we've been highlighting over the last week or so on our morning reviews, and if you do follow us on Instagram, at Phoenix Blue Trading, you'll know that we talk about the risk on, risk off environment quite a lot. Now, what we will expect is if there is a sell-off in global equities, we will expect strength in Japanese yen. So whether this was a move from the Bank of Japan to counteract a possible shift from equities into Japanese yen, who knows? So we're actually going to sit on the sidelines now with the Japanese yen and its respective markets. So all cross pairs will sit on the sidelines just for a little bit until we can see what's actually going to happen here. Now, opportunities. So we're looking at potentially getting short Canadian dollar or selling oil. Now, we can see that this market came into 1.4 last week on the Thursday. We did have a trade sat here and we did take a loss. Now we can see that this market is sitting still here. However, we're going to see what actually happens. We are looking at getting long. We do believe that this market's going to move up to the 1.46 again with sort of midterm target around 1.5. If we do see some bullish movement through maybe smaller time frames, we will be looking to get long this market again. Alternatively, we'll be looking for the market to come down into the 1.38s, 1.3830s, where again we'll be looking for our price action, our entry methods to get long. If we are going long from here, our first target will be changing, and our first target will be around the big number, the 1.4s. On the back of the bad data from China last night, we've seen a sell-off in Aussie dollar, which is always expected. It does have a knock-on impact on the Aussie dollar. However, what we're going to look for is we're going to look for maybe a little bit of a correction or a relief rally back up to 71.30, 71.40, where we can see that this market tested the trend line, tested our little resistance area, and we'll look for it to come back up into here, and we'll look then to sell this market off back down to year lows. Okay, so Aussie dollar is a market of great interest. The next one is gold. Okay, so gold we've been long since 1075. We hit first targets towards the back end of last week. Now we do have a position waiting to go long again. So we had a nice bullish bar last week after breaking through our resistance area. Well, we're looking for this market to retreat back towards the early 1100s before making an onward move up towards 1200 and 1220. Our first target, if we do get long again, will be the high of last week, and then we'll be looking at significant moves up towards 1175, and then next move on up towards 1200s, and again up towards 1250. So that's gold. And last two markets, we're looking at crude and the S&P 500. So crude, well, we can see that this market has had a huge sell-off, especially since Iran came back into the play, and they're producing heavy, I think in the region of around 500,000 barrels of oil. Now they're looking to increase that to about 1 million barrels of oil per day by the end of the year. So what we do have is we've got oversupply and lack of demand at the minute. Now we can see that the market has pulled back up into the shorter term trend line, touching previous cycle lows. So we can see this market has now stopped. And what we'll look for is we'll look to see if this market is going to hold here, and then we can look to sell this off back down to the high 20s, where we see this next support box, and then we'll be looking to see if this market holds. If not, we envisage that crude may get down to 25 or maybe even as low as $20 a barrel. If this area doesn't hold, our next stop will be around 38.60 and the top of this longer term trend line. Okay, so we've got a couple of opportunities there with oil. Now, for the intraday traders out there, once you've got your bias and once the market has come back to where we actually want to get short or long, and the market starts to move in our direction, then this is where you should be looking at taking advantage of the one directional move. So here we've had the retracement. Let the market stop, turn, take a breath, and start to fall. Once it falls, this is where you can then trade intraday with the trend, with the stronger direction, and with the money flow. When you trade contrarian, i.e. against trend, it's always a lot riskier. So if you are a contrarian trader, my advice is always trade at reduced risk. Remember, protect that capital. Capital preservation keeps you in the game. On the last chart, we're looking at the S&P 500. Well, we can see significant trend line here. This is the weekly chart. You can see that each time there's a big sell-off in the market, for whatever reason, usually something to do with China over the last few months, it tests this 1840 area and this trend line. We've had the reaction. Now we're looking at this market pulling up into around the 1980 to 2000 number, where we will be looking for short opportunities. If it just goes straight through, then the next area where we're looking for shorting is around 2024 to 2030. Okay. Now, information guys, like I've said, if you've enjoyed the video and you this is your first time to our channel, please click on subscribe, hit the like button, and we look forward to seeing you again. Now, we are also on Instagram at Phoenix Blue Trading, where we do post live charts daily, things that we're looking at, or where we're looking at exiting. Any questions, please email info@phoenixblue.co.uk, and we look forward to seeing you tomorrow morning. Okay, have a good day, good luck with your trading, and stay disciplined. Thanks, guys.